You've found the FarrCast, your weekly podcast with conversations from across Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. Happy Halloween, everyone. Happy Halloween. And as if you're listening over the weekend, happy All Saints and All Souls Day. All of those are coming up. That follows right on Halloween. You see the connection there? Halloween, and then we get All Saints, All Souls. You figure out All Souls would be good for me. I don't even aspire to All Saints. Markets are aspiring to other scary things as they trade a bit lower. Futures are down. Earnings season has started. And some of the tech companies are disappointing. Some of the tech companies disappointing Wall Street. They've been on fire. And when they hit a little bit of a hiccup, boom, boom, they punch them in the nose hard. So we're seeing a broadening out, but we're seeing some of these stocks pull back a little bit from being at extraordinary levels. They've gone really, really high. Don't forget your gains that you've had over the past 12 months, 10 months, 6 months, 4 months. You've made a lot of money. You're giving some back now. Don't panic. Be calm. Markets go up and markets go down. They fluctuate. Over time, they tend to go up. Okay? So, a little bit more nervousness coming into the election next week. We've got Mahaffee coming up, and then we've got Daryl Owen for segment 3. Daryl Owen, a White House Capitol Hill expert who specializes in energy. We're going to talk about nukes, but we're also going to talk about the price of oil. We're going to talk about the Middle East. He has his finger on the pulse all over Washington on these political implications, what the Kamala Harris Green New Deal would be, what that would mean to business, everything else. We're going to get to that in the FarrCast. But first, because you love him, we love him, who the hell doesn't love him? Kenny Polcari, the chief market strategist for Slatestone Wealth, the voice of the New York Stock Exchange, and our great friend here on the FarrCast. Welcome back, Kenny.
Oh, it was a pleasure, Michael. Thank you for having me.
Thank you for coming.
Happy Halloween to you.
Happy Halloween. Yeah, man. Happy Halloween. So, among our big tech stocks, Microsoft missed a little bit. And the stocks pulling back, and some of these others, Meta, missed, pulling back. I mean, I'm mentioning individual stocks, not as recommendations, just to say that these are the headlines in the news today. So, Kenny, what do you think the tech's pulling back and people are losing it over these big, these big tech stocks coming down?
So I think you made the point very clear, right? That no one was saying anything when they were running up, and everyone was patting themselves on the back, thinking how great they were doing and how smart they were. They owned all these stocks. Meanwhile, we've been talking about how they've gotten stretched. Valuations have gotten stretched. So now, when earnings seasons come, and maybe they hit on the earnings per share and what happened, the historical data, meaning what they're reporting in earnings and all that. It's the forward guidance where they're being a little bit more cautious on. Which is suddenly causing the algorithms, because I really think it's much more algorithmic driven, the speed and at which it happens and the extent to which it happens. I think it's much more algorithmic driven, but that's another conversation. It is quite honestly not surprising. And guys like you and me love days like this when you get good names. There's not Amazon. Where's that really going? Is that going anywhere? No. Or Apple or Microsoft. And so these are good names that maybe are going to come under some pressure. A lot of it, usually, like you and I say, the pendulum sometimes swings too far to the left and then too far to the right. And so, I actually welcome the fact that they're backing off a little bit. It'll shake the branches. We'll see who latches on and who doesn't. And that'll kind of talk a lot about, the people's commitment to the names.
A lot of people, Kenny, are paying attention to some of these stocks that are showing a lot of volatility when they miss or when they exceed. But so much of this has to do with the expectations and how much has been communicated by the company before they come up with their earnings release, before they tell you they've got something good or something bad. All you know on Wall Street is that we hate surprises. We've always hated surprises. Everybody knows the one thing about us is don't surprise us. Don't surprise us, and you'll be fine. Why don't these other companies figure this out, Kenny. Why do they leave it up to these last minute surprises? Like, oh, you didn't know that you were going to be,
Well,
you know, $300
exactly.
million light on your number? I mean, give me a break.
Exactly. And that's the part that's always frustrating because you can't tell me, to your point, that they don't know. Of course they know. And it always does them better to pre-announce and they forewarn. Now, will the street punish them a little bit? But if they forewarn and say, look, we know we said this, here's what it's kind of looking like, here's what we think the problems are. Yeah, it'll back off a little bit. But to your point, investors will actually be thankful and grateful that they're upfront about it. It's when they wait until earnings day, when they know damn well they were going to miss it, then it seems like, is there more to the story? Why did you tell us? Why did you wait? Why did you surprise us? To your point, the street doesn't like to be surprised. Look what they did to ASML. ASML missed, right? They reported early in October, right after the end of the month of September. They missed by a fairly large amount. They said it the day of, and they crushed the stock. In 2 days, it was down 22%. In 2 days, it was down 22%, taking it down 35% off the summer high. And so I sit there and I laugh and I go, well, what's the matter with these people? Why didn't the C-suite say something? They knew damn well they were going to miss it. Well, what's interesting, I had a conversation with somebody about this exact point. There are some companies that won't pre-announce like that because the C-suite compensation is tied to stock performance. And so at the end of the month of September, they mark the market, right? So they did, here's the price. But if they had pre-announced before the end of the month in September, the price would have been different. The price would have been different.
Oh, okay.
And so there's a little bit of, well, maybe if I just wait, we'll mark the market. My compensation is going to be X, and then we'll tell them that we're missing it, which I think is okay. You want to do that. I hear you.
One of the most dangerous things to listen to is a first-time CEO's first press conference, first time they're out, and they tell you what they're going to do with the company, and they give you the first report after they've been sitting in the chair for 3 weeks, and they start blowing sunshine everywhere about how great it's going to be, and then the forecast that's unattainable, unachievable, because they've gotten where they've gotten by espousing these huge goals, and then they charge hard and they, beat the bushes and try to do it. But if they fall short, Wall Street kills them. Do not surprise us.
That's right. And so there you go. So what's happening is that these companies that are waiting till the day that they report to then say, well, their guide's a little bit weaker or they've missed a number, whatever, they get what they get, right? So investors go, okay, great. And then they react the way they react. And I'll tell you, and I said this to you, the algos react even more negatively because you and I, right, we have emotions, we have feelings, we can sit here and, okay, let's talk about it. Let's not overreact.
Wait, you have emotions? You have emotions? Wow. Anybody there? Polcari has emotions. Sorry, go ahead.
But the algorithms, obviously they have zero emotion. So for them, it's just a number. And so they respond to the way that they were programmed to respond. They don't really care. Is it down 5%? Is it down 10%? It doesn't make a difference. You and I may sit back and go, I'm not selling this thing down 10%. It's a long-term holding. I'm just going to ride it out. Maybe I'll buy more. But the algorithms will, they just don't care, right? They're not made to care.
So you and I talked last week about this report out of Goldman Sachs that the future for the next 10 years was going to be 3%, growth for the S&P 500. And when we said, you can't do that, but you can't get too far ahead of your skis.
Right.
So I want to talk about two things here as we close out for today, Kenny. I want to talk about when you sell a stock, and I want to talk about our rules because you talked about the lack of emotion and trying to be just a rational person. When you buy and sell, the more machine-like you can be, the better, is what Farr is going to tell you. But at Farr Miller in Washington, we have 4 rules for which we'll sell a stock, the 4 tenets of our sell discipline. And you ask any investor and they say, well, why do you buy stock? And they'll say, well, I want margins here and I want to receive a return on equity better than this or better. And I want the debt level here. Good. Tell me, you want the real test. When you interview a money manager, folks, the real test is ask them when and why they sell and get their rules for selling. And then say, great, thank you so much. And repeat the 4 rules of selling to them. And then say, I would like you to show me your most three recent sales or four recent sales and tell me why those sales met your sell discipline. I don't care whether you made money or not. I do not care whether you made a profit or not in that stock. I want to know, and I want you to show me that they met the sell discipline. If that works, if you see that that manager's hitting their sell discipline, that they have one and they adhere to it, I'm going to like that manager, and I don't even know what they do. So I'm looking. One of our four is disingenuous management, and it's the only one of our four where we feel we need to sell immediately, where we break glass, hit the button, it's gone, and we'll ask questions later, right? So all of a sudden, when you get the stink of dishonesty on you,
Right.
right or wrong, that's one of ours, and I can show you points in time when we've done it. So talk about, would you, just those times when you would, other times when you would sell a stock, you say the machines do it based just on without any emotion.
The machines will do it based on, like, if it's a negative headline, the algorithms will do it if it, I mean, there's a discipline there, but then the algorithms tend to just overreact, right? They just keep selling it and creates this more of an exaggerated or an amplified move, right? But to your point, it's okay to be machine-like if it hits your metrics, like you said. So go back to perfect example back in September or late August, whenever Warren Buffett was selling Bank of America. Remember that Monday morning all came news, Warren Buffett selling Bank of America. Okay, well, guess what? He was only selling it because guess what it did? It hit his sell metric. There was no other reason. It wasn't because he didn't like the stock. He owns the stock at $5. It's now trading at 40. They own, 100 million shares of it. Give the guy a break. It hit his discipline, so they sell it. Everyone panicked. If Warren's selling it, there must be something wrong. No, that was his metric. And so therefore, the stock's gone up since he sold it, by the way. So all I'm saying to you is, to your point, he has a metric. He had a decision to make.
Yep.
It hit his limit, and he sold it. He's not looking back and saying, oh, that was a mistake. Not at all. He did what he was supposed to do.
Right. And so you follow your discipline. So let's take a look out into 2025. And we're talking to Fred and Ethel here as our final word now. We've got all of this volatility. Stocks have done really well. We're seeing a pullback in the area of tech, and we're seeing the Fed still in this line of cutting, but maybe not too much given some of the employment data we've gotten this week. Jobless claims. Consumer spending has still been pretty robust, more robust than expected in September. It came out, consumer spending, PCE, price deflated. One of the Fed's inflationary numbers is pretty much in line, but nothing looks like it's cooling down too much or too fast. So what do you think as we go into 2025 and we're going to end here, Kenny? Tell us.
Listen, I think you have to remain a little bit cautious. I do think there's some volatility ahead. I do think that there's going to be a little bit more concern because both sides, whoever wins this election, both sides have promised to spend more money like there's no tomorrow. So I think you have to just be a little bit concerned on what that's really going to look like once we know what the composition of Congress is, as well as who's in the White House, and you can get a better sense. Now, doesn't mean you should be out, not at all. You just should make sure that you approach it with a little bit of methodology that you understand, and you maybe be a little bit more patient, right? I don't think Goldman's call at 3% for the next decade is relevant, nor do I think it's realistic, quite honestly. Maybe I'm wrong, but I don't think so. But look at the other things. The only thing that I would say that we need to listen to is going to be next week's Fed commentary.
Absolutely.
On Thursday, because they were so aggressive in September, because they were so sure that the labor market was weakening. They had to cut it. Labor market is not weakening. And so it's going to be interesting. I don't think they're going to cut rates. And so I think the market may have a little bit of digestion, meaning they're going to pull back as a result of that. And then you have this contentious election. So the next couple of weeks are going to be fairly volatile, especially if we don't get an answer next Tuesday or Wednesday. If this gets dragged out for 3, 4, 5, 6 days, then the markets could, to your point, because of uncertainty, get a little bit more volatile. But I think it could get dragged out for 3 to 6 more weeks, no problem. So so then that takes us well into November, right? well
Yep.
into
Oh, or December. Yep. Or
Yeah.
December. The only thing I know is there will be a president,
Yeah.
January 20th, right
Right.
at noon.
But basically to your point, I remain bullish in 2025, but I also remain very, very cautious about what I own, right? We like you, we stay in the sectors that we want with the highest and the best quality names in those sectors, just so there are no surprises.
That's the thing to remember. Think long term and stick with it for the long term. Have a strategy, have a discipline. Don't be emotional and listen to Polcari, Kenny Polcari, chief market strategist for Slate Stone. He's the CEO of Case Capital and our great friend. Thanks, Kenny. We're back with Mahaffee. Please stay with us.
You can hear the sound of surf guitar, which means that it's time to go to Chicago, surf capital USA, and our good friend Dan Mahaffee. Now here's your host, Michael Farr.
Welcome back to the FarrCast. Joining us now, as he does every week, our senior political analyst here on the FarrCast, Dan Mahaffee, vice chairman of the Dr. Scholl Foundation, scholar at the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank. Welcome back, Dan.
Thank you, Michael. Good morning to you.
Good morning to you and good evening to you. Actually, is it November 1st there?
No, it's still the 31st, so it's Halloween, but it's 10:30 Tokyo time, PM for me.
Got it. 10:30 Tokyo time for Dan. Wow. 10:30
Yeah.
Tokyo time, 9:30 here. Got it. Well, Dan, thank you for joining us late at night in Tokyo. Very much.
Happy to. They've had their election here and are asking questions about ours coming up. So where do you want to start?
You tell us, how are you answering their questions about our election?
Well, I think, look, if they ask me where it's going, I still repeat what I've told your listeners: coin flip, coin flip, coin flip.
Yeah.
Here I tell them, take that yen out of your pocket, flip it, and if it's a chrysanthemum, it's one side. If it's 100 yen, it's the other. It's
Right.
It's a similar thing too here. They've had their election. It's inconclusive in terms of obviously the majority, how they move forward, but they are obviously very concerned about what direction America will take, not only on the geopolitical stage, but what some of these economic policies mean, tariffs. Look, I don't know how much coverage. I've been trying to track what's gone on in the US. But look, Elon Musk's statement that the tanking the economy is part of the plan, even that's been covered here, because they wonder what is going to be the impact on the global economy and the trade that they have with the US.
Dan, how do you respond though seriously to questions like
Sure.
that? I mean, I presume you say we have to see what happens, and all of this is more hype than anything else.
Yeah, there's a lot of hype. I say, look, a lot of crazy things are said in the final weeks of a campaign, and we're dealing with a very heated contest, as we've talked about, a country that's 49-49, highly polarized, and looking inconclusively, and not having much debate on actual policy issues, and a lot more back and forth on culture war, vibe statements, things like that. So it's hard to say what clear policies are. And then I also caution them that other than tariffs, so much will require a congressional agenda, congressional completion. And we're going to have divided government and narrow majorities in either house, Senate or House. So for them, it's a question, and I say to wait and see what the policies actually are. To, of course, be concerned about tariffs if Trump is elected, what he says and how he will apply them. But also, too, that if it is a Harris team elected, there will be some tough questions. Her advisors are largely Europe focused. It's not clear who's a Asia hand who would be there. So, ultimately, I say buckle up, but I would remind them and I would hope that whoever wins does quickly travel to Asia after they're elected, travel to Japan, and remind the world how important this relationship is between the United States and Japan, economically, financially, and also for security here in the Indo-Pacific.
Dan, let's go back. I've got two things I really want to drill down on. First, I have been saying, given the closeness in this election and in all the polls, and the polls reflect which way the popular vote may go, and what we're seeing is razor thin. But let's say that Kamala Harris wins the popular vote. The way things are lined up right now, it's much more likely still that Donald Trump will win the Electoral College. So rather than flip a coin, actually, when it is this close, doesn't this closeness, particularly in the 7 key states, doesn't it favor what my suggestion that she might win the popular, but he looks much more secure? No matter who wins the popular, he looks more secure on the Electoral College vote at this point.
I think he does, as long as you continue to see those polls at least have shifted in those key areas, North Carolina, Pennsylvania, Arizona. But the caution there would be that how are these polls being weighted? What does that mean for momentum? What are these pollsters imagining the electorate will look like? And probably the pollsters aren't really sure at the end of the day what it's going to look like. But I think you're right in the sense that the Electoral College does tip in his favor still slightly towards former President Trump. But the fact that he will, again, it's the Electoral College is how you're elected. End of story. So I think that's the question is not so much of which state ultimately tips it, but is how that ultimately in the end is accepted by the opposing side.
Okay. So if that happens, then the other big question is what happens on Capitol Hill? Does the Senate go Republican and does the House stay Republican? What are the chances then, if Donald Trump wins the Electoral College vote, that there actually is a sweep in this election and all three houses, if you will, the executive and the upper and lower house, go Republican?
To be frank, Michael, I think that we'll probably see a Democratic House and a Republican Senate, both with narrow majorities. That would be my guess, looking at some of the details of the not only the district by district competitive races, but also what you see is up for the Senate now.
Let me drill down one more second, because the scenario I just painted, where either side, ladies and gentlemen, has a complete sweep, is always the scariest one for me, no matter who wins. So you don't really think that's a real possibility? Give me odds on a full Republican sweep. Give me a percentage odds. I want to know.
I would put a full Republican sweep at about 20%. I would put a Democratic sweep at 10%, and then the odds of a divided system at the other 70%.
Okay. I can live with that. If there is a sweep, does it look so narrow that either side will be struggling to get anything done, as much as this very narrow Republican margin in the House over the past couple of years has struggled to get things done?
I think if you see a narrow Republican majority, it's going to be more of this, a narrow Republican majority in the House. You're going to have more of that same tumult and inability to govern, just given the nature of that caucus and some of its more combative members. If the Democrats do take a narrow majority, look, some of those squad members have lost in the primary, and they're going to be probably a more manageable caucus for a potential speaker, Hakeem Jeffries. Senate, on the other hand, is going to be an interesting dynamic because, look, if it's close, and even if the Republicans do prevail and it's close, whoever is in that Senate is going to have to prevail upon some still independent thinkers like Lisa Murkowski, Senator Murkowski from Alaska, Senator Cassidy from Louisiana. The Senate's
who runs the Senate? Who inherits the mantle of Mitch McConnell?
I think if I had to put a bet right now, it's probably John Thune, but I also wouldn't rule out John Cornyn.
Which one has the more powerful, do you think, public, persuasive, charismatic of the two? Neither one of them.
Look, I think they're both solid senators. Thune is probably the more public facing. Cornyn has always been a good, solid, behind the scenes worker, but has just never had as much of the public persona stepping up to the microphone as you've seen Thune do previously.
Okay, sounds like Thune then. I'll go with Thune on that one. Okay, Dan. Uh, all of this is very helpful. We're going to talk with Daryl Owen about energy policy coming up and see if we can understand why this is so critical to AI and so critical to America. Why the energy production is really going to determine who dominates this battle of AI going forward.
I'm going to want to hear that because energy is a big topic here in Tokyo, be it restarting the reactors where they've had the earthquake and tsunami. They know they need the energy. They're also moving to hydrogen, other things like that. That's top of the discussion on the economic side here in Japan.
And do you have any thoughts before you have a question for me to ask to Daryl?
Look, I think where are we going with these discussions on reactors? How long is it going to take? What's the environment look like for actually getting these proposals to power nuclear or other sources here in the U.S.? Because if we don't, someone else will.
And, really important questions and not just sort of I'm intellectually curious about this stuff. This is vital stuff. And a lot of it has to get through a very complex regulatory environment. And look, we're talking about nukes. It needs to be a regulated environment. It just can't prevent America from getting done what America needs to get done to ensure our position and protect ourselves and our future and our children and our grandchildren. These are the issues. We're going to get to them with Daryl when we come back. Dan Mahaffee, Vice Chairman of the Dr. Scholl Foundation, scholar at the Center of the Study of the Presidency and Congress, our great friend, senior political analyst from Tokyo. Thank you, Dan.
Konbawa, Farr-san.
Konbawa.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We hope you're enjoying this week's edition of the FarrCast. Please share us with friends and colleagues. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. So far, I'm loving this FarrCast, Harry, the Halloween version of the FarrCast. Starting out with Kenny Polcari, Mahaffee. That was a terrific segment. And he's sticking to his guns here. Flip a coin, folks. Still flip a coin. We're days before the presidential election. And you've got one of the smartest guys in Washington, one of the best analysts I know and have ever talked to, saying flip a coin. So we'll now try and figure out some of the underlying issues, get a better sense of things with our great friend Daryl Owen. Now, Daryl is a serious Washington, D.C. insider. Start out with he's a lawyer. Don't hold it against him. 12 years in the U.S., working in the U.S. Senate, chief of staff for a U.S. senator from Louisiana. And then he was staff director of the Senate Committee on Energy and Natural Resources. Hey, Daryl, in spite of all my funniness, happy Halloween and welcome back to the FarrCast.
Nice to be here. Thank you.
We're very glad you're here. Daryl, we're hearing a bunch about, of course, energy and the environment. Every election cycle, as we do, we're hearing about Green New Deals from Kamala Harris. And we hear about the environment on all sides. What is the role of these environmental discussions in Washington? How significant are they? And like, what about the effects on the economy? And I'm even going to take you to AI this morning because a lot of the AI companies are talking about starting their own mini nuclear power plants to generate all the power they need to keep this generative AI moving forward. Do they have a prayer? Can they keep up? Is that really going to be a hitch? All of these things and more coming up on the FarrCast as we hear from Daryl. Where would you like to start? Pick any one of them, Daryl.
Well, there's only about 12.
Yes.
Well, to my eye, we haven't had much of a robust discussion about energy policy or environmental policy during the presidential campaign. You hear,
Why is that, do you think?
it doesn't matter. It's not on the first top 10 of people's concerns for the election and who they're going to vote for. They figure Trump will be better on energy production and theoretically on prices, and she will be better on the environment, but it's down their list of concerns.
Is it down their list of concerns because the price at the pump is relatively low? I mean, as long as I'm okay at the pump, I don't care about energy. Is it that
I
simple?
think that's a lot of it. I think, we are confronting a real steep hill in terms of meeting anticipated energy demand, but for the moment, things are working and prices are relatively stable, both gasoline and electricity, although there's a little upward price pressure, certainly on electricity. But I just don't think it's top of mind for most of the voters out there, and therefore the campaigns sort of check the box on this stuff and then move on to issues that they think will resonate a little better with the voters.
What are the companies, when companies come to you and I know you have a robust list of them right now, major oil companies, energy producers, and in that business, what are their concerns and what sort of help do they need in DC before we get to the AI question?
Well, there again, that's a pretty wide open question. We're producing more energy than we ever have as a nation. A lot of the big companies still love to bitch about the fact that there's too much regulation and not enough access to resources, et cetera. But if you look at what they're actually doing, they're producing in greater volumes than they ever have. They're all, while maybe not making as much money as they did 2 or 3 years ago coming out of the shutdown, they are making a lot of money because they've cut costs, they've maximized their efficiencies, and they're actually doing quite well. So it's a little hard to fashion too much of a to-do list for those guys. A lot of them are focusing on all of the monies that were made available under the infrastructure bill and the Inflation Reduction Act. They're just hundreds and hundreds of billions of dollars that are out there in the form of low interest loans, tax breaks, et cetera. That seems to be where most of the focus is. And the Republicans like to criticize that because of all the deficit spending that it represents. But what they are finding and what they're going to continue to find is that a lot of big companies have invested a lot of time and energy and money in taking advantage of some of these programs. And it's going to be very hard to claw that money back as they move forward without really disrupting some people who have relied in good faith on the availability of that money.
What will they do with that money? What are the priorities for that money? Is they're coming to try and get the loans and the everything else? Clearly, I would think it's for expansion as opposed to. I'm guessing they can't just use it to refinance their balance sheet. So what do they want to do? What are their plans?
Well, a lot of it, Michael, focuses on the development of energy that's not currently commercial. Hydrogen is one that sort of leaps to mind there. There are a lot of different ways that you can produce hydrogen. It's difficult to transport because it's so light, but you can convert it to ammonia, transport it, and then convert it back into a fuel source or feedstock. But developing an economy, a self-sustaining economy for hydrogen is very challenging when oil and gas prices are so low because you just can't really make any money at it. There's a lot of government support out there to help facilitate the build out of a hydrogen economy. So that's part of it. Part of it is carbon sequestration. We're going to continue to produce CO2. We might not want to admit that. Some of the environmental supporters would like to shut it down as much as possible. But the reality is we're going to continue to generate a lot of CO2. Well, sequestering that makes a lot of sense to a lot of people. There again, there's not a great economy to support that. So you need some level of government support and loan guarantees or tax breaks in order to facilitate that.
Okay. Is any of this money by chance going to be spent on upgrading and updating the U.S. energy grid? I mean, that seems to be a real point of vulnerability across our country. We still had brownouts last summer. We know that Texas is kind of a special situation as they've gone independent. They like being independent when they're producing. They don't like being independent when they need help. And hurricanes hit down there in Texas. I've had plenty of other CEOs from various electrical utilities go, serves them right. But that's still not much of an answer for Texas. And we know the same people, Daryl, so you know who I'm talking about. But the energy grid, nuclear power, everything in this country, I mean, it does seem to be an Achilles heel, or am I wrong?
No, you're absolutely right. The electric grid in this country is not rational on any supportable level.
What do you mean by that? What do you mean it's not rational?
It's grown up whole cloth as a series of local distribution systems which have expanded and connected to other distribution systems which have committed to some power sources. But there's not anything that you would describe as a holistic approach to how this is being done. It's being done spontaneously in dozens and dozens and dozens of different places for different reasons. And there's a big desire now to facilitate large-scale transport of electric power from where it can be generated, particularly by environmentally benign resources like solar and wind, to where it's needed. But you run into a lot of obstacles there. You've got incumbent electric utilities who resist somebody coming into their service territory. You've got states who resist the notion that we're going to pay for and facilitate the construction of a large power line that doesn't serve our people. You got a lot of people who are pushing back for both monetary and political reasons. And that's retarding the process of rationalizing this grid. The FARC is doing what they can. They've got a couple of major rules that are out there that are designed to sort of force people to come to the table and work this stuff out themselves. The message being from the FARC, if you don't do it, we will, and you'll like it a lot better if you do it rather than what we do. But that can only accomplish so much. So it's going to continue to be a slow process where transmission is concerned.
Okay. Slow process where transmission is concerned. And now if we take a quick turn to energy production in the U.S. and AI companies that say they're going to be buying or starting their own mini nukes, and you've got Google buying 3 Mile Island and buying all of the energy being produced from 3 Mile Island. I'm presuming they're saying we're going to start our own mini nuke because it's easier to get through the regulatory process. What do you think, Daryl?
The experience that Southern Company had building the 2 large nuclear reactors at Vogtle was not a pleasant one. They were $17 billion over budget. They were 20 years from the time they submitted their combined construction and operational license before they actually were able to generate power. That's not something that many companies can sustain. Southern Company is big enough, has a big enough balance sheet, and is robust enough. They could endure it, but that would have bankrupted most utilities in the country. And it's not something that you're going to see a lot of corporate leaders want to take on.
Well, okay, so tell us why. What took 20 years? Did Southern Company mismanage the project? They didn't know how to build one? What happened? Why did it take 20 years?
Well, I think it's a combination of things. The supply chain for nuclear is a unique one. The quality assurance program for nuclear construction is unlike any other that is out there. It had deteriorated dramatically through the years because no one was building nuclear. Basically, you had to rebuild the whole QA structure and the whole workforce structure to support the construction.
I'm
At one
sorry,
point,
I hate to stop you again. What's QA structure? I don't know what that is.
I'm sorry, quality assurance.
Quality assurance structure. Okay. So basically, are you saying that there are so many more rules in this area because we're dealing with highly volatile materials and we have to keep this stuff super safe? Is that what makes it difficult?
Absolutely.
And
Absolutely.
didn't Southern Company know that? I mean, did they add more regulations? Did they make it tougher? Was it a political football? Should this have taken 20 years?
It likely wouldn't take 20 years if we turned around and tried to do it again, but nobody knows, how much quicker it can be done. And so you knock 5 years off of it, you're still balance sheeting billions and billions of dollars for 15 years. That's not a lot of fun. And I think
But it's not a lot of fun if you're a CEO who has to make a quarterly earnings call and explain why you've decided to deploy capital that way. If the job of the CEO is to deploy capital in the most efficient way for the company and the shareholder, 20 years is an awful tough sale, isn't it?
Oh, absolutely. And are you going to build a 350 megawatt combined cycle gas generation plant that you can make operational within 2 years and you can pay for? Or are you going to go orders of magnitude larger than that and billions and billions of dollars and dozens of years to generate the equivalent amount of power? It's a IQ test for these CEOs. That's why I say I don't think you're going to see anybody repeat the Southern example. There is an infatuation with the smaller reactors, and people use that term in a way that's not very precise. There are a variety of different small modular reactors, as they're called. Some of them are just little bitty versions of the big reactors. They've not been widely embraced because they've got the same issues that the big reactors have in terms of quality assurance, in terms of safety of the uranium itself, in terms of protection against terrorism. All of those things apply to a small reactor in the same way that a large reactor, except you don't have the economies of scale and all the power coming from it. So what the industry seems to be moving to is smaller reactors with a different type of fuel that can be managed in a different way. So it's not the same. It's a nuclear reactor and the chain reaction is the same, but it doesn't create the same challenges and the same problems of the large reactors or the smaller versions of the large reactors, if that makes sense. And that's what you saw Amazon Wholesale embrace last week in Virginia, where they announced that they were going to build a host of these things. They're actually going to inject capital into the process, which is going to help the developers a lot. But I still think, Michael, it's going to be 8 or 10 years before these things are deployed. The AI industry can't wait that long and won't wait that long. And so what I think you're going to see is, long term, we're committed to green power. Long term, we want to have sustainability. But near term, we're going to build a lot of gas plants to fuel a lot of data centers out there so that these guys can get out and meet the market. And if they don't do it in the U.S., they'll do it in Saudi Arabia.
A lot of gas plants, and they will do it in Saudi Arabia to produce the power. That's interesting. Okay.
Yeah, that's one of the issues that's at stake right now with federal regulators. Federal regulators are on the verge of intruding into state economic decisions about build out of these facilities, how they're going to be powered, how they're going to integrate with their local facilities. Well, if the feds jump in the middle of this and screw it up, these guys will be gone in a heartbeat. You saw KKR yesterday announce $50 billion worth of AI investment. Now, that's just KKR. They're not going to screw around with delays that are prompted by the federal government and an intrusive regulatory program that prevents them from going out there and meet the market. They'll be gone in a heartbeat.
And then all of a sudden that power generation's over in Saudi Arabia, and that means that they'll put the data warehouses that are generating all those computers over in Saudi Arabia, and we're going to be trying to get then the data over here, and Saudi Arabia will certainly figure out a way to control or disrupt if they ever need to. Am I getting that right or wrong, Daryl?
No, you're absolutely getting it right. And the White House issued a national security memorandum last week. And if you read it and read it carefully, by the time you get to the end of it, you want to open up a vein because you begin to conclude that, wow, there's so much of a challenge out here, and we're not doing the things that we need to do to meet the market and address those challenges. And if we lose control over our AI assets, we're hosed. And that's one reason to focus. There's a big technical conference coming up at FERC on Friday. There's a huge amount of focus on what the federal role is and is not when it comes to supporting AI development and the build out. So that's where I'm seeing most of the focus right now, where energy policy is concerned.
Absolutely fascinating. And you can hear, ladies and gentlemen, why this is so important, why we talk about this on the FarrCast, so that now you understand something that I didn't understand. Maybe you did before, but here's something now. Why do we need to really focus on how we're going to produce the power for AI? Because if we don't, somebody else is going to do it, and they're going to do it offshore. And if we take it offshore and you've got all of that AI power sitting over in Saudi Arabia, we are then vulnerable in a way that we don't have to be. There's no reason we can't do it here, but for our political system. Is that fair, Daryl?
That is fair. I think what you may well see is the build out of hyperscale AI campuses, for want of a better word. Not 3 or 4 or 500 megawatts worth of power, 3 or 4 or 5,000 megawatts of power.
Wow.
In sites where you can build a power generation as well as the data centers, where you can get a fuel source into it. Near term, that's going to be natural gas, and where you're not burdening existing consumers with the cost of the program, yet you're able to get what you need in order to develop it and meet the market need.
One of the great signs for me as we record FarrCasts is when I don't want to end the interview because it's so damned interesting. And this is one of those, and I've got to end it. But I hope, ladies and gentlemen, you've learned as much as I have on this one. And we're going to get Daryl to come back and explain more. Daryl Owen, thank you, thank you, thank you. We've learned a lot. We really appreciate it.
Well, my pleasure. Thank you for having me.
That's it for another FarrCast, ladies and gentlemen, as we cover Wall Street, Washington, and the world. When we come back next week with you, we may not know who the new next president of the United States is. And please go out and vote. I don't care who you vote for the person you want or that you hate least. I really don't care. But this is the American right, and this is the American system. This is what we do. So go be a patriot, go vote. God bless you all, and God bless America. For the FarrCast, I'm Michael Farr.
Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.